So Tesla stock pulled back today, and in this video I want to go ahead and talk about whether or not this weakness that we're seeing is really something we should be concerned about, or whether this is one big nothing burger. Now, it wasn't just Tesla and Silo that fell down. We actually saw that S&P 500 have a down day as well, and part of this was due to cracks showing in the regional banking sector again. I know, oh my goodness, the small banks are messing up again, right? And we'll go ahead and touch on that. But whether there's fear about financial stability, liquidity risks, or just tight credit conditions, that's always going to influence the overall market in a negative way, right? When you have some type of fear there. Now, when it comes to Tesla, right, one thing we want to go ahead and touch on is really just from a technical perspective, Tesla still remains in a clear uptrend, right? The stock is holding well above its 50 period and 200 period exponential moving averages, which show that buyers are still in control in the longer trend, right? And so that's something that's positive. Now, we also see right here, right? This is what we have plotted, which is the market profile. And one thing that the market profile shows us is how long price was distributed at certain times. And so what we see is that this is where institutions, right, accumulated shares earlier in this year. And so even though the stock is kind of cooled off from its recent highs that we're seeing, it's still well above this accumulation area, right? And so it often signals when you see something like that, that the market is consolidating strength, but it's not losing it, right? And so I want to go ahead and kind of just flip over to a bit of a valuation perspective, because when we look at the Bloomberg data, right, something that really stands out is this fact that despite Tesla's trading, around $430 per share, analysts have significantly cut their earnings estimates for the next couple of years, right? So the 2026 earnings estimates, right, the consensus, the earnings per share, the consensus has dropped down to roughly, $2.42, right? That's what we see over here as of today. And so that's a drop of more than 40% year over year. And so in other words, Wall Street's future profit expectations have fallen significantly, yet Tesla, its price is still high. And so normally what you see with, the red line is, earnings per share. What you see with the earnings per share estimations dragging down, you tend to see price drop down. But Tesla has completely broken from that relationship, right? We're seeing Tesla stock all the way up here when, earnings per share estimates are all the way down here. And so why is that? And the answer lies in how the market is choosing to value Tesla, right? And so this is why, you want to have some type of different approach. You don't want to just look at the market from a fundamental perspective, because a pure fundamentalist will look at this and say, yeah, the numbers are not looking good, right? And so you want to kind of layer it from a different perspective and use a little bit of technical, a little bit of macro, and a little bit of understanding the story behind the business, right? And so Tesla stock, it isn't being priced as a automaker. When we look at the actual price for Tesla, it's being priced as an AI and energy play. And so what we're seeing is that, and this is clear based off the evidence in the price action, because price is what pays, which was famously said by Brian Shannon, who's a chartered market technician. Price is what pays. And so that's what you really want to pay attention to. What is price doing? Yeah, we have the future earnings per share estimates down here, but what is price doing, right? And that's how you want to manage your portfolio, right? And so what we're seeing is that investors are increasingly looking past the near-term margin pressures and slower delivery growth, and they're focusing instead more on the longer-term potential of Tesla's AI infrastructure, fully self-driving rollout, energy and storage business, etc., right? And so that's kind of one of the benefits of being an independent investor. Wall Street doesn't get to do that, right? Because if you're managing a hedge fund, right, it's going to be hard to buy into a stock where the fundamentals are not there, and then if the stock starts coming down, well, people are going to pull capital out of the fund, and then you go out of business. So they don't have the luxury of taking as much risk as an independent investor. But just understand that when you're buying at these prices and the fundamentals don't really align as of yet in the short term, there is risk, right? Because you're still taking a gamble on FSD and Optimus, etc. But what we're seeing here is that market participants believe that the next chapter of Tesla's growth won't come from selling cars, but from monetizing intelligence, data, and distribution of energy systems. And so that's why even with an earnings per share revisions, fall, like this major drop and decline that we're seeing here, the stock keeps finding support. The market is betting on future optionality, right? So it's a sign of conviction, right? That's something you want to be mindful of. So, we're still far above where institutions have been, accumulating. This is kind of where they see fair value. We're also over here, we're kind of consolidating as well. The buyers, hitting the bid, and then the sellers, right, hitting the ask. The stock is going to consolidate when you have these areas over here, because that's seen as fair value. And so what we're seeing is that, yes, estimates have come down, but if anything, the recent price action is more impressive, and that's really where the story lies. And it shows the narrative that driving Tesla is much more than just the short-term profits. It's a long-term story. And so the market is treating Tesla the way, it treated Apple in 2008 or Nvidia in 2019, as a car company transitioning from a single product business to a full-scale platform. And so, that's why even in the face of banking jitters, which we're going to go ahead and talk about in a moment, and falling earnings per share expectations, the long-term setup for Tesla is still relatively bullish, although you have to be pragmatic. And so I'm saying this now, but if there's new data that comes out that proves otherwise, then of course you have to change your mind, right? If things change, then you have to change, right? You can't just have a firm belief and be dogmatic, right? And so, we'll go ahead and touch on that. But again, as I mentioned earlier, Tesla stock having a red day, but the overall market is pretty much having a red day, right? We're seeing the market push back a little today. And this has to do with the regional banks, right? Again, no surprise. Regional banks are having problems. So we have this regional bank, Zions Bancorp, and they mentioned charge-offs and fraud allegations. And so I'll go ahead and kind of touch on this. So they mentioned, 114 million in charge-offs, but they clarified that 50 million of it is due to loans to fraudulent borrowers, right? And so essentially, and I'll go ahead and explain this as best as I can, right? What we're seeing is that a lot of borrowers for these small regional banks, they did collateral fraud, where either they said that they have, let's say, this house or their car to put up as collateral for the loan when they didn't. Or either that, or they had maybe these assets, but they use the same asset for multiple loans. And so that's why we're seeing regional banks kind of fall down a bit. And the reason why we're seeing the market kind of get a little sketched out by this is because if that does not just stay contained within regional banks and it bleeds out, it could get kind of ugly, right? But for the time being, right, if it stays contained and it's nothing crazy, right, it's not like a fundamental error, like a breakdown or crack in these regional banks. It's just, they're not handling and doing the right due diligence for the loans that they give out. And so it's causing some panic in the market. And ultimately, that could be an opportunity. We do have Tesla's earnings coming out fairly soon, next week. And so we're consolidating. Now, if we break down and we, tremble down and we break below the 200 exponential moving average, then yeah, I'll change my mind. I do just want to disclose I do have a position in Tesla. I have trailing stop losses, right? I think that's the best thing you can do to protect yourself in any market, right? For example, this is a position that I shared for those that are insiders at Push and Profit Research. Okay? So we're seeing gold, just rally up tremendously. And so I have exposure to gold. I'm up 17% on gold during this massive, rush. But I have a trailing stop loss, right? And that's the best way to protect yourself, because when the story changes, and the story often does change, right? Then you'll want to rotate and find an area, a pocket in the market to really put your money to work for you. But right now, at the time being, gold is pushing up, and I believe a lot of it has to do to the uncertainty with the government shutdown, along with several other variables, including what we recently saw with the regional bank sector kind of falling down. But with that said, I'm gonna keep this video short here. I'm not gonna go into it any longer. If you do ever want to get more of my breakdowns, make sure to check out the links in the description below, because one of the links is a link to join the Push and Profit Insider Research Group. And with that said, before you guys go, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.